What we have seen from the market so far has been encouraging. Interest spreads in Europe has been much reduced. We have seen this fall in the euro, one-sided versus emerging markets and dollar, which we think is a sign of easing of monetary policy. So we think the worst fears about the banking system has receded. I think that's mildly encouraging. We also see inflation has come down sharply over the last 2 months in emerging markets, which means that we will probably see some easing in monetary policy during the next few months. In the countries where we haven't seen that before, we saw that was on track in Russia and Brazil before last year end, and we think we will see more in China, India going forward. And that will be the main turning point, we guess, in this market cycle. I think they're on the way back. We have seen emerging currencies advancing quite a bit into the new year, very much a reversal of what we saw second half of last year. And activity has been very high after a very low activity last autumn as well. So it seems like we are in a risk-on environment for the time being. No, I think most of these countries are in even better shape than they was back in 2008, which means that stimulative measures we will see the effect on that quite rapidly in the system. So far it's been on expectations, but we think realities will count more here. I think the situation is very like what we saw back in 2004, 2005. We had some localized property bubbles which hurt the banking system somewhat. But that, after a few quarters, there was back on a solid growth path again, and I think that's what we will see this time as well. It's in Chinese economy, there's a big rebalancing mode, which means that the consumption story and real income story is still working. And that will be more important than the investment cycle going forward.